All right. Good morning, everyone. Happy Monday. As always, we'll do a brief forward market outlook, and then we'll go over some individual ideas. Again, end of last week was pretty crappy to say the least. We had the SPY, pretty much closing at the low of the week, right near this prior pivot low. Pre-market, pretty much kind of flat, but you have to, we kind of have to expect this to shake out or break down in like some capacity. It's going to be very hard to expect, like given this action, for buyers to really come in with some strength down here and like rip this higher. That's obviously what probably most of us would want to happen. I just don't know if that's going to be the case here, given how 495 out of 500 S&P names closed red on the week, or red on the day on Friday. But again, this measured move here, this range, the SPY's been in, it's been a 50-point range. And the measured move in time, not like it's going to happen this week, but would bring it back to 360. That's the technical measure move of this base if it was to break down. So that, a lot of us have been, talking about, oh, we'll shake out 410 and hopefully 400 holds. And that's like, we could probably be there by Tuesday or Wednesday if we do shake this low out. But realistically, if we do break this and we continue to put in these lower highs, which we've been putting in recently, then in time, that's probably the path that we head to. Now, we do want to take that with a grain of salt, because just when the market, gets near this 460 area, we're often thinking the market's going to 520. So obviously now with the market looking extremely weak, it's easy to think that we could go to this 360, where maybe we do have to shake out 400 and get one or two, nice green days, and then we're back in this range, and everything's all good in the world. But for now, it does look pretty bleak. Every major sector pretty much got hosed last week. REITs that have been very strong lately have gotten pretty beat up. Even like the really strong ones, like ESS was one that looked great through this 360, and now it's just back in this bigger part of the range, where this was one of the sectors that was strong, that's now getting kind of taken to the woodshed with everybody else. Materials still dead smack middle of the range, between the range has been trading in. Healthcare, basically was retesting its all-time highs 2 weeks ago, and it's going to be back near testing its 52-week lows 2 weeks later. So it's a lot of back and forth action. Energy, again, we already know this uptrend has been broken, and for now it's kind of in a void. Either it's going to consolidate up here in a bigger range, or kind of continue to drift lower towards the 200-day. Consumer staples, and what was the other sector? And utilities, kind of trading almost hand in hand, where like utilities is kind of leading, where utilities was one of the stronger sectors recently. We saw it with this little Mickey Mouse flag, and we kind of knew, okay, let's place our mental stops near this area if we're in those stocks in that sector to kind of take some profits off. And now the hard move is like in motion. This is where it kind of pulls back into its relevant range and trades. And we can see for consumer staples, they're like a little bit behind the utilities, where they're just now starting to break that prior all-time high area on the way back down. And they'll probably follow suit with what utilities have been doing, where it just kind of pulls back into the relative range that this sector has been trading in. Telecom and biotechs and industrials all in the same stage 4 breakdown, just lower highs, lower lows. Very obvious avoid. Even like the big name in the sector, Verizon, is just getting destroyed lately. We're seeing, again, same thing with the biotechs like telecom, just this very clear breakdown stage. There's no base yet, no real capitulation or like consolidation yet. It's just breaking down, and we're seeing kind of the same thing with the biotech sector. Still putting in new lows, putting in lower highs, and these are just avoids. And we're seeing the same thing with the industrials, which isn't as beaten up. Again, we talked about how consumer staples are kind of following what the utilities are doing from like the run up they were on, where we can kind of see that telecom has been the leader on the downside in this breakdown stage. We can see biotechs have been kind of following them, and we can see the industrials are kind of in third place from a breakdown standpoint, where they're still trying to continue their breakdown, but it's not as aggressive as the two that have been much more weaker. And then we have telecom and consumer discretionaries, again, both trading very similar, very close to their respective areas of support. where we kind of have to expect a shakedown or a breakdown lower. And for us, we just keep lowering those, prior pivot highs for spots to add back up on the way up, because eventually, we'll see the low. We just never know until it happens. But for now, it's, let, the consumer discretionary break out, and then we can look for like those little sneaky buybacks back up through 280, things like that. So that's, again, a broad market outlook. Everything is very bleak. The more that you can probably see in cash right now from an active standpoint is probably going to be the move. From a more passive long-term standpoint, doesn't matter. For the people buying these sectors daily and weekly, you're getting great prices, and eventually, you'll be rewarded for those consistent purchases. The only two names stock-wise that I'm keeping an eye on is this PG, Procter & Gamble, Dow 30 name, consumer staple, very conservative name. This is not a name you're going to lose 20 or 30% in. We can see this like 164 level, this blue sky breakout area has been setting up for some time. Still very, this pattern probably still needs much more time to develop. I don't really expect this to go this week, but when it does want to take out this 164, 165 area, this looks like a name that you can, have some very defined tight risk in, but it's going to be a little more of a slower mover than some other names. And then this IT, still surprisingly, hasn't really gotten too beat up in the market. Still kind of trading in this base. It could obviously still shake out this area. We got earnings in, I guess, tomorrow. So we'll see. But for now, keeping a closer eye on this 310 area, maybe 307 or 302, depending on how it reacts with earnings. But other than that, not really much on the radar. Obviously, no winners from last week, since most names got pretty banged up. And the only two ideas that are still somewhat relevant over the past weeks, I believe this was one of Kush's ideas, STER through 29, and this CHD through 105. I forgot which member called this one out. Those were just what I want to go over. Heaven, if you have anything, you can jump in, and then Kush can go next, and then we'll go over any member ideas.
Yeah, keeping it pretty short and sweet. I really like that PG as well. That's basically the only thing that's on my focus list for the week. I took a small position last week on the little break of that like small little minor resistance trend line. So just kind of sitting in this one with a stop under 159, see if it works or not. Mostly just kind of a test to see if anything will hold up in this market, but not too eager to do anything right now. Relative strength wise, last week, this CYTK had a huge day on Friday. I was trying to find some news on it, but I didn't find anything yet. I'm going to keep looking today, but something to keep an eye on. Obviously you can't really just buy this today through 41 or anything like that, especially with earnings coming out later this week, I think Wednesday. And obviously the risk is massive because your support's all the way down at 34, but something to keep an eye on with this one, just relative strength wise, still basing. So if this one can continue to go sideways while the market's coming down, I think it has potential to be a market leader when the market turns back around. Other than that, just sitting on the sidelines, building that shopping list, going over earnings reports, and doing the boring stuff.
Nice. All right, Christian. So what are you looking at?
So if I'm being honest, there aren't too many good looking charts, but I agree with Haven. It's just best to build that shopping list. Being that, I still do have a couple names. The first one being AN. It's a retail name. We saw there's a big change in trend in a lot of these retail stocks, but I would like to see it work under 118. It just reclaimed the longer term MAs. I would like to see like the shorter ones catch up, and I just need to see it consolidate first. So if you draw a trend line down, you can see, it's working. Big change in trend if it could go past that level.
I like it.
Next one, this EXEL. It's been consolidating
The
the past year.
Sorry, is it EXEO?
Yes. Oh wait, EXEL. It should be
What's the third ticker? What's the third letter of the ticker?
E and then L.
EXEL, Ben.
Oh, yeah.
Yeah, we've seen this one a bunch of times. Yeah, I haven't watched it.
Yeah, 23.5. It's been consolidating the whole year. I'm not looking to buy this up anytime soon, but once it gets earnings out the way and it could work under that level, continue to consolidate, it could be nice. Not looking to buy this anytime soon though. And after that, I have one more name. It's a recent IPO, but it's EE.
EE.
EE. Yeah. That's not the one.
No, yeah, you looked at you're not looking at the US one. Yeah, there you go.
I mean, right now there's nothing much to make of it, but if it could work under this 28, I feel like this is a level to keep an eye on. And 29 is a IPO high. This is just a name I'm keeping my eye on. Want to see how this works. It's holding up pretty well, being the market, being relatively weak. So just keeping an eye.
Yeah.
And I think I have one more. This ARCH. It pulled in really heavy, but one thing about this is the volume was light. Earnings came and volume picked up. A lot of institutional buying. So if this could consolidate under 176.50 and tighten really heavy, we could see a bigger move. Not looking to buy this like within the next couple of days, though. Needs to work.
Yeah, no, looks good. The CE is cool because it's like, the recent IPOs are not really as correlated to the market. They're going to just kind of do its own thing. And, through that, through 28 or through 29, those are definitely two spots that definitely make sense. And it's not the craziest amount of risk. Like if you were, say for example, it triggered today, like it opened up through 27.50 through 28. You can buy versus 26.50. It's not bad for a recent IPO.
Yeah, well, I'm just building on my list. These are the names I'm keeping a little bit heavier watch on, but not looking to buy. So yeah, that's it.
Have any member ideas?
Not really. I saw that Eric posted a few yesterday, last night that we can sort of go over if you want. He was looking at PFE to the downside. If you want to look at shorts, I don't know. Sort of a clear downtrend, this like weak bounce last week and then kind of had some follow through. Looks like it's gapping down right now, so it would be tough to grab that short. Another one he's got on his watch list is TSN shorts. Clearly hates Tyson food and chicken nuggets, which I'm very much on the opposite end of that. But hey, you can't let your biases get to you. So this does look like a pretty nice short through that 92 area. ALLE, he's looking at to the long side, looking for some more consolidation to start a position with a viable pullback off the moving averages. So not quite ready yet. I mean, obviously still in a pretty deep downtrend since September of last year. With a lot of overhead resistance, but it's sort of starting that stage, that stage one consolidation again. So we'll see if it can actually base out here for the next few weeks and really give us a clear entry point. Another one he's looking at is low. Value name here. So he's looking to take long off this 195 support area if it can hold. Again, sort of just building this base between 210 and 190. I think for a few weeks, if they could do that, and then maybe report some decent earnings to give it that next push back to the upside, could be very interesting. He also had PG on his watch list, and he's looking at McDonald's, MCD, earnings out of the way. Still needs a little more time, but the weekly chart actually looks pretty nice. I like how it's consolidating. Just needs a little bit more time, but through like that 250, 260 area in time, I think would be nice. And that's about it for member ideas.
All right, so short and sweet. All right, guys, so quick one this week. Be patient. You don't have to buy every single day, and let's wait for the easier times for sure.
Yes. Oh, actually, I want to mention one more thing. Val said it the other day, and it's just been ringing in my head. And he was saying he doesn't really want to be buying when there's one or two good setups. You want to be buying when there's like, when you can see it, when you can't figure out which one to buy because it all looks so good. That's when you need to really be putting like pedal to the metal and really investing all your cash. Not all of it at once, but you get what I'm saying. It's not, the goal isn't to try to find the one good trade and the one thing that's going up while the market's going down, because most of the time that doesn't have much follow through anyways. So stay patient and wait for those proper swing setups to hit you in the face and then start then.
Couldn't agree more, Evan. All right, so we'll talk to you guys in the chat, and you guys have a good day.
Yeah, Q&A at noon. See you then.